Hi guys, this is Mark Shawson, the pattern trader here. I'm actually extra pumped by what I'm seeing in the market today. But as you guys know, that we've been dealing with a fairly crappy market environment for the last 13, 14 weeks, where we've seen effectively the US dollar index trapped in this sideways trading range for about 14 straight weeks. It's also been a comparable period in gold, XAU, USD, where the same thing. We've seen gold trapped in a $30, $40 trading range for the last 3 months. But as I predicted in my video yesterday, I think all of that is about to change big time. And I always compare these periods, the lull before the storm, saying, something akin to what we see surfers, out in the ocean, waiting for that wave. And you can see them sometimes going out 5, 6 in the morning when the water is really still and just staying out there for hours waiting for that ride. And sometimes as traders we have to mimic that kind of behavior, where some environments are obviously better than others. And for the past 3 months we've had especially difficult trading conditions just because of these constricted trading ranges. But I have been exhibiting confidence, notwithstanding this trading range, all the way back, a couple weeks ago, that the US dollar index was eventually going to break to the upside, meaning that the dollar was going to start trading higher against all the major currency pairs. And that's exactly what we're seeing in the market today. So yesterday in my Sunday weekly video report, I did an extensive analysis of the US dollar index and compared this pretty obscured H price pattern that we saw in the January-February time frame to a similar pattern that I saw in the pound yen. Now, don't worry, I'm going to show you exactly all my analysis on a chart in just a moment. But even though this H price pattern happened in the January-February time frame, and we've effectively traded sideways for 3 months since then, to my mind that price pattern ultimately forecasted and projected that the dollar was going to break to the upside. And as I said today, we're seeing exactly that. So again, when we're in this calm, in this lull, this is the time to keep our powder dry, not risk too much. And now when the markets are breaking out, this is really the time to put some money in the bank. Today, the New Zealand dollar versus the US dollar is making new monthly lows. The US dollar versus the Swiss Franc is making new monthly highs. The dollar yen is exploded. As you guys know, in my elite program, we've been long dollar yen for the last week from the low 107s. Now it's almost 109. And similarly, we see a huge move lower in gold. I had a short recommendation in gold yesterday at 1331, and we're trading at about 1322, 100 pips lower in gold just in a few hours after that recommendation. So now I'm going to go to the charts and show you exactly what I've been looking at in the US dollar index, comparing it to a huge move in the pound yen, and what this projects for the next couple of weeks. So again, I'm extra pumped. I think that these markets are going to explode in our favor. I think we're going to see a big dollar move. I think we're going to see gold move lower. And like I said, now I'm going to show you exactly what I'm looking at on the charts. Okay, in the video I just taped, I alluded to the email that I sent yesterday to all of those members on my Sunday email list. You can see the date right up here, Sunday, April 22. And I actually had a little tagline, US dollar rally forthcoming, in my tagline. and I talked about the extensive analysis that I had been doing on the US dollar, and I said it's increasingly likely we will see a short squeeze and a sizable trading rally very soon in the US dollar, and we're seeing exactly that in today's market action. I also talked about on the monthly time frame that New Zealand dollar was in the process of forming a triple top bear price pattern, and this should be soon followed by a cratering of prices in this pair. And again, this is exactly what we're seeing in the market today, where New Zealand dollar, US dollar is reaching multi-week lows against the US dollar. Also in my email, I talked about the dollar index and this H bottom that I alluded to. Again, I'm going to draw it up on a chart in just a moment. You can see these twin bottoms, and all the way back a couple months ago, based on that H bottom, I was predicting a breakout to the upside in the US dollar. More recently, we've had a couple of key reversals, and I'm going to compare this chart pattern to another chart pattern in just a moment that predicted a sizable move also for that pair. Now, also in my email, you can see that I was long dollar yen from 107.43. Right now we're at 107.80, so exploding on all of the positions. Also, the pound New Zealand long trade is also exploding in our favor. Now, this was the New Zealand dollar chart that I was looking at yesterday. Sorry, my chart sizes are a little bit off, and you can see in my weekly analysis I showed that there was a triple top right at a multi-year resistance level in the New Zealand dollar, and again recommended getting short in that trade, and now we're firmly in a trade that is making new weekly lows. Also, this was my analysis on gold, that we'd reached a triple top within an ascending broadening price formation in gold, and that I was projecting prices to retreat back to this 1270 price level, and again gold is just plummeting in today's market action. You can see here was my trade recommendation at 1331. I think we're at 1323 now, so we've got about 80 pips of profit already in this trade. Lastly, I was looking at the pound versus the US dollar, looking at a double top here and recommending a short trade there. So now I want to go back to this dollar index, this reference where I isolated this H bottom and then these twin key reversals that to me made it baked in the cake that we were going to have an extensive rally in the US dollar, and we're already starting to see that take shape today. Before I do my analysis on the similar chart to the US dollar index, I wanted to share with you an email that I sent out on November 9th, 2016. And in my analysis on that day, I was looking at the pound versus yen with a buy stop at 131.75. Again, while it may not be apparent on this chart, I'll blow this up in a minute. We had this very subtle H bottom. Then it went sideways for many weeks. Then it put on two key reversals before I recommended putting this trade on. After this trade was triggered, it went up 652 pips in my favor. At that time, the price level was 131, and now we're trading at 155 in the pound yen. So this very subtle double bottom price pattern in pound yen was the trigger for a massive move that ensues to this day. And I'm going to compare this to what we're seeing in the US dollar index in just a moment. Now before us is the chart of the pound yen daily chart that I was looking at before I triggered that trade. And what I want to, again, direct your attention to is this very subtle H bottom. Now an H bottom is called that because it looks like the letter H. If we kind of draw it this way with the line here, it looks like a crude H, and this indicated a reversal pattern. When I noticed this, it triggered in my mind that this pair was making a bottom. Now, you have to consider with respect to what happened or preceded before that. This pair was in a tremendous downtrend that was accelerating every day, every week, every month. But when I saw that bottom in my mind, when I saw that print, I made a mental note that that was the very bottom of that move. And as you can see, it exactly was. So now you can see once that H bottom was made, it took many weeks of sideways trading, very subtle trading, where nothing was happening. And then we see these two key reversals. And I'm going to pull up the US dollar index, and you can see how this behavior almost exactly mimics that, where we have the H bottom right here, and we have these two key reversals that preceded an enormous move. Now, since that time, pound yen has even considered, has gone even higher and is trading at 155. So this may be what is in store for us when we look at the US dollar index. This is a chart of the US dollar index. It's a composite of the US dollar against a handful of major currencies like the euro, the yen, the pound, the Swiss franc, and even the Swedish krona. And as you'll notice, for the past 13 weeks, we've had mind-numbing trading range where we've seen nothing but very, very contained sideways action in the US dollar. But all the way back since this juncture, I've effectively been predicting that the next major move in the dollar would be higher. Again, predicated on this H bottom, where again, it looks something like the letter H when we draw it thusly. So after we had this H bottom, we proceeded to go sideways like we did in the pound yen for many weeks. And then more recently, you've seen these two key reversals. And what do I mean by key reversal? To me, a key reversal is simply noticing how a market closes relative to the high and low. And when the market closes on the high part of the bar, now remember, this is a weekly chart, so each one of these bars is a weekly time frame. When it closes on the high part, it represents that the buyers were in control and won the week. And to my mind, these reversals also point in the direction that the market wants to go. So again, when I put out my email yesterday, this was before this market action today, and you can see that the dollar is breaking out of this range to the upside, and I project that it will go at least to this juncture, if not higher, over the course of the ensuing days and weeks. So let's see the ramifications of a dollar rally on some of the price charts that we've been looking at. This is a price chart of the New Zealand dollar versus the US dollar on a daily chart. And again, if we think that the dollar is going to go higher, as presumed by my analysis of the dollar index, then it suggests that the New Zealand dollar will go lower versus the US dollar. Now, you'll recall my email yesterday, I recommended selling the New Zealand dollar, US dollar trading pair, and you can see that prices have just cratered today to new weekly lows. So we've come under that recent low, and we're now sitting on new weekly lows in the New Zealand dollar, US dollar. Now, again, I was going off this huge price pattern. This is actually called an Eve and Adam double top. The reason why it's called an Eve and Adam is because this particular spike was made up of multiple prongs to the upside. This contained just one single spike. So it's actually called an Eve and Adam double top. Now, when you add this spike here, we almost have a triple top bear pattern. So with the word top in it, it suggests that this pair will be trading lower over the course of the next several days, weeks, and perhaps even months, and perhaps at least down to recent support areas at the 6,800 price level. In this chart, I'm looking at the US dollar versus Swiss franc, and as my members know, I have been projecting higher prices in dollar Swiss for many weeks now, principally off this double bottom price pattern. And again, this is an Eve and Adam double bottom, where we have one bottom containing multiple spikes to the downside, and this bottom containing a single spike. So it's an Eve and Adam double bottom. When we basically cross through the neckline, which is simply a line that crosses through the pattern, it effectively confirmed this double bottom. And with the word bottom in it, it presumed that prices would rise over time And this is exactly what we've seen, and I don't think we've seen anything yet, as I believe that dollar Swiss will ultimately challenge the highs at 103 in the near future. Again, principally based on the double bottom price pattern we're looking at, and also on the projected rally in the US dollar that I think will continue over the course of the next several weeks. In this chart, I'm looking at XAU USD. This is spot gold. I'm looking at a daily chart time frame. And as we can see, we have traced out a triple top in XAU USD. And again, if we anticipate that the dollar is going to rise, I think that gold will be a casualty. Remember that XAU gold is measured against the dollar. And if the dollar is going up, XAU necessarily will be going down. So I do think that gold will be a casualty of the stronger dollar. We're seeing this triple top. This, of course, won't be confirmed until we cross through this major neckline around the 1308 price level. But once and when we cross this, I think that prices project at least down to the 1270 or lower in gold. So I hope you guys have enjoyed this analysis, and I'll speak to you another time. Take care. Okay, I hope you guys enjoyed that analysis, and I'll be speaking to you real soon. Take care. Bye-bye.